Retail sales rose 1.2% in May. That's largely in line with what economists expected. Consumers spent more money on gasoline, autos, clothing, and building materials. And here with more analysis is ITG chief economist Steve Blitz. So retail sales were much better in May than April. Consumers seem to be spending more. What does this mean for the retail sector? I mean, our own Jim Cramer said retail stocks have been quite inconsistent lately.
They have been, and I think there's two ways to look at the number. I think if you look at it from a broader standpoint against consumer income, what you really see is retail sales kind of catching up with aggregate income. And by aggregate income, I don't mean average hourly earnings, but the total of wages coming into the retail sector because of higher employment, higher wage rates, as well as hours worked. So when you track that growth against retail sales slackened off a little bit against that, and it caught up. So I think that's the one way to look at it. The other way to look at it, another way to analyze it, in effect, is that one is consumer spending on restaurants was a little flat. And that's not wholly unexpected given the increase in gasoline prices. Last year, as gasoline prices were falling, what we saw was that people ate out more. Yeah. And so now that gasoline prices are rising, people are eating out a little less.
We also saw a 2.1% increase in auto sales. I mean, so does that mean auto stocks will do better, or is that a trend you're going to continue to see?
Well, auto stocks have done better, I think, and I think so. I mean, I think the number that we saw in May was probably a little too high in terms of being sustainable, but I think something in the sort of 16.8, maybe 17 million as a annual number for the year is probably on target. I don't think we're going to hit 17.5 or 17.7. I think that's probably a little high. You know, I mean, spending and seasonal adjustments and things like that can be really choppy when you look at it month to month. But, you know, over 3-6 months, these things tend to iron out into what the trend is.
And the same situation with building materials. We saw consumers spend more money perhaps at Home Depot and Lowe's.
Yeah, you know, it's interesting. When you take a look at spending on household-related items, which is, as you say, building materials, garden supplies, but also electronics, appliances, home furnishings. When you look at all of that and you total it up, you see just the extent to which retail sales have dropped, or at least that sector's take of the retail dollar has dropped. Pre-recession, that was running around 18-19% of total retail spending outside of oil, gasoline and autos. It's down now around 14%. Now, it has trended back up in the last few months, and if housing does pick up, we expect a better housing environment this year. It has picked up this year. But if you get the kind of surge that some people were expecting or are expecting, I'm not expecting quite that level of a surge, but I am expecting, as I said, a good number, then there's a lot of room on the upside for these retailers to capture consumer dollars.
All right, Steve Blitz, the chief economist at ITG, thanks very much for coming in.
Thank you for having me.
I'm Scott Gamm, and you're watching The Street.